Hey everybody, Economic Ninja here. I hope you're doing well. We've got a lot of news to cover and it's all about Russia. We have Russian gold imports being banned. We have a bond default. We got a lot of stuff going on. So without further ado, let's jump right into it. Right now, we're going to talk about gold. Gold rises as G7 nations plan to ban bullion imports from Russia. Now, this is a really interesting story. We've been talking about this for a long time. These financial wars that are going on right now. You have wars, you have rumors of wars, you have actual boots on the ground, but then you have economic wars. And this is part of an economic war. Now, we've been talking also about how Russia and China have band together, and we are literally seeing the world's financial system being split into two. They are literally we're literally talking about the East versus the West. And quite frankly, the sad thing, being that I'm an American from America, I do not think that we are in the #1 position, quite frankly. We have Russia and China that have been huge buyers of gold for quite some time, building an alternative to our SWIFT payment system over there. That's not only, it's a lot better, it's faster, it's cheaper to use, it's a lot better than the old antiquated SWIFT messaging system. But also we're seeing them buying up assets from all around the world. They're expanding, right? Whereas America and Europe are, quite frankly, financial basket cases, and that's what I'm concerned with. Well, let's dive into this story a little bit. It says gold prices gained on Monday as news of some Western nations planning to officially ban imports from the metal from Russia for its invasion of Ukraine. Okay, and that sparked some interest in bullion. It says 4 of the group of 7. G7 rich nations moved to ban imports of Russian gold on Sunday to tighten the sanction squeeze on Moscow and cut off its means of financing the invasion of the Ukraine. Now, do I believe that Russia is using gold exports to finance this? No, I do not believe that. Russia has always sold gold, right? There's only one country that I know of that is so tight when it comes to gold, and that's China, meaning that China is a massive importer of gold, and they also do not allow gold to be exported. The government buys it from their producing mines. Now, I know what you're about to think. There are Chinese gold coins all around the world. That is true. They do allow a certain amount, but it's very, very small in the grand scheme of things. I'm going to give a little bit of my thoughts here in a second. Now, spot gold only rose 0.5% on this news. It really is a nothing burger when it comes to it, but it's the stuff that's going on behind the scenes that I want to talk about. Now, just a little bit more in depth, it says, the G7 import ban on Russian gold seems to be providing some short-term support in early Asia trading. And this came from Jeff Haley, an analyst. He says, though, however, it is mostly a rubber stamp exercise in reality for the grouping. And I do not expect this to mark a structural change in the supply or demand outlook that will underpin prices. I completely agree. And the reason why is, first off, there are a lot of countries that want to keep the price of gold suppressed, at least the spot price. That's what they have control over. The one thing they do not have control over is the physical price. And that's what a lot of people don't understand. Sometimes they see these spot prices getting suppressed down, and they are. But right now, if you have been paying attention to precious metals prices for the last year and a half, the physical price, the price that's over spot, right, that has exploded. And not only have you seen that explode, because that's true price discovery, what you've also seen is these delays in shipments, especially on sizable gold and silver purchases. That has exploded too. It's ballooned. Sometimes it can take weeks to get your physical precious metals. And what's really interesting about that is that shows the real issue with the supply chain when it comes to the metals. Another thing that blows me away too is, for people that are newer in the space investing in precious metals because they want to hedge themselves against inflation, what's happening is if you're new, it's like it's an emotional purchase because it's money, right? You want your money and you want it now. It's the J.G. Wentworth kind of style of investing. The problem is people don't understand that just like when you buy something on Amazon or when you buy something online at all and there's a shipping delay, people just chalk it up for, well, that's how life is. That's the situation, the supply chain disruption. Well, I'm going to have to wait like 5 weeks to get my dishwasher. I'm going to have to wait 4 weeks to get my TV because it's just coming from a new place, right? But when it comes to precious metals, they freak out. And that's something that people, once you start to learn the system, you go, okay, and as long as you're buying from a reputable dealer, company that's been in business for a long time, that's something that just happens and you go, okay, I get it. My money's coming. It's a contract. It is showing up. It blows me away that it's like when they hit that emotional peak, people, and they go, okay, I'm panicked now. I'm going to sell my CDs, my certificates of deposit, or I'm going to sell a bond, and I'm going to go and buy this. It takes a little bit of time to get to them, but in the same time, they were waiting for a promise from a bank for interest to be paid in the future, right? Like with a CD or bond. And it's one of those things that people getting into the space need to realize. This is unprecedented. In the last 12 years of me being invested in this space, I've never seen anything like this. But that is a sign of the times, that are people trying to diversify out of it. Now, I want to also get into this. Russia sliding into historic debt default as payment period expires. Now, we've been talking about this for a while, and the news has been ramping this up, all right? But as of today, you know, as of the filming of this, not a lot has changed in the markets, the futures market. And I want people to realize that really, if you start thinking about it, it's a lot of rhetoric being thrown around, but we're going to dive into it anyway. It says interest payments totaling 100 million were due on May 27th and subject to grace period, which expired Sunday night. Sweeping sanctions imposed by Western powers in response to Russia's invasion of Ukraine, along with countermeasures from Moscow, have effectively ostracized the country from the global financial system. Now, guys, we want to talk about this rhetoric and these war drums that are being beaten by the MSN, okay, the mainstream news media, because I literally think that we are about to lose in this situation. Okay, it says the Kremlin has rejected the claim that Russia is in default, whose spokesperson, Dmitry Peskov, reported telling a press call this morning that Russia made the bond payments due in May, but they have been blocked by Euroclear due to Western sanctions, rendering the non-delivery of payments. Now, guys, we saw this a while back where the Western governments imposed a certain sanction on Russia that they were not allowed to make US-denominated debt payments. It was this whole messed up thing. Essentially, what we were trying to do is put them into a position to default because we want to make them the boogeyman, right? We want to push this narrative on people. Then we saw this amazing thing like with oil purchases and things like that. Russia flipped the switch and they said, okay, you can only buy in rubles. And what a lot of people didn't realize was they were giving that oil away because the ruble had collapsed, right? They gave it away at a very serious discount. And it sounds funny that there are a lot of people that have told me, they said, well, why would Russia do that? Why would Russia lower the price of their oil? Well, I'm like, well, you have to first remember that a few months before all this started, oil was X amount, all right? It was a certain amount in dollars. But then when the run-up of oil happened, it was because of the Ukraine deal. So all Russia did is said, hey, you know what? We're going to sell to you in rubles. We're going to give it to you at 2 months ago prices. And that's it. And what happened is it bolstered support for the ruble because countries were going in, buying up rubles, and they were turning around and buying oil with it at a discounted rate. And it was amazingly brilliant. I believe that what you're about to see with all of this, because these are, like the Kremlin says, they go, hey, we haven't defaulted. We are being told, like, literally, here's the money, here's your money. And they're slapping the hand away and said, we don't want your payment. We don't want your payment. And that's what's very important for all of you to understand. They're trying to bring a narrative to a lot of investors around the world to say, hey, you don't want to invest in Russia right now. You don't want to invest in them because they're bad. They're defaulting. They want to destroy their credit score. But the reality is they do have the money and they are trying to pay. This is very, very dangerous. And the reason why I say it is because I think that the Western powers are about to get their face slapped by Russia and China. And remember, too, these news stories are going out, and not a lot of people are talking about the fact that China said we are moving into Taiwan. And I want you to understand that I believe that this is I personally believe this is going to happen. This isn't financial advice, trading advice, because this will, if or when it does happen, it will dramatically affect stock markets around the world. Because when China moves into Taiwan, well, what are we going to do? Are we going to react the exact same way and impose these sanctions on China? Because if we do, it is only going to destroy our economies. Western civilization, Western economies are seriously tied to the Chinese market as of right now. Whether you like it or not, that is the case. And so when they move in, it will absolutely crush the stock market because there's going to be outlying or long-lasting effects because of our ties with China. So I want people to understand that. So as you're watching Russia, I want you to understand if we have to impose the exact same sanctions on China, and China knows this, it's going to crush us. So in the beginning of this thing, it looks like we're in control, we're pushing the buttons, but in all reality, it's the countries with the most gold that are pushing the buttons. When it all comes down to it, Dow Jones is down, NASDAQ down, S&P down, crypto's down, right? Gold's also down, but here's the question. You have to ask yourself, which one's down the least? And with that answer, it's gold. Guys, do me a favor, hashtag gold in the comment section. Let me know you guys watched all the way to the end. I thank you so much. I have the greatest subscribers on all of YouTube, and I really appreciate you. With that being said, the Economic Ninja is out.